insurance for your rentals. I think it's really important to make sure that you guys are covered. Like, this is the most valuable assets that we have. And you don't want to have or run into a situation where all of a sudden you are being sued. You don't want to get to that situation. I think I might have told you guys a story that I had before where I had a traditional long-term insurance on my property. I had a nurse that was in my property. She was working at Memorial Hospital, and she picked up a coffee pot, and it was like a cheap one from Walmart. She picked it up and it freaking broke and spilled coffee like all over her stomach and her thighs and stuff like that. I don't know how that happened when she was standing up in the kitchen, but just days before that, I switched from a traditional long-term insurance to a short midterm insurance. And if I didn't do that, I would have had to pay a lot more. It would have been a whole big old thing because that coverage will not cover anything that happens to a property if you have somebody that doesn't have a long-term lease in that property. I've talked to people at the summit and stuff where they've come up to me and be like, they've said, I've really screwed up. Here's what happened. I had traditional long-term insurance. I didn't have additional coverage on my property. And again, as I mentioned before, these are the most valuable assets that we have, that we pour a lot of money into. And you want to make sure that you're covered to a certain degree, because again, that is so important. And I can't tell you guys something, if you're in the game long enough, something is going to go wrong in your property. Like, it just will. So I think, again, it's so important to make sure that you're positioning yourself to be smart, things like that. So Nick's here today to kind of break down what Proper does.
For those who don't know me, my name is Nick Massey. I'm the director of sales at Proper Insurance. I've been with Proper since January of 2016. My formal background when I got into insurance was in estate planning for farmers and ranchers out here in Montana. So my kind of structural background coming into short-term rentals is, a much broader scope of asset protection, which plays really well into this type of real estate portfolio and building this type of generational wealth on how to protect that, how to manage that, what type of resources to use at your disposal to be better in your business. I'll touch mostly on Proper because that's who I directly work for. And for anybody who's in arbitrage or owns a home, that's the most important piece of the puzzle for you right now to make sure you have sorted out and you understand it. And then I'll touch on Wavo and Wister, the other two brands also, because Wister does fall into, if you get into this co-hosting model or even roll into more professional management, depending on your state rules and regulations. So kind of jump right in. A little bit about Proper, founded in 2014. Our ownership group has been in hospitality insurance programs for about 30 plus years, building, developing, selling programs. Proper is kind of the evolution of the modern innkeeper program that they developed back in the early 1990s. So a lot of experience there in what builds this product. It's also what allows us to have two very strong relationships with Lloyd's of London and Concert Specialty Group, which are, large market insurance market players in the world. And they allow us to create and curate the product. They're basically hands off. They just write the checks when something happens. We've insured well over 100,000 units across the U.S. since inception. We're over 14 billion in total assets that are protected under our book. What that should mean to you guys is, yeah, that number sounds big. We're still relatively a small company in the grand scheme of things. But if all of our homes and units caught on fire tomorrow, our insurance carriers have to have $14 billion to pay out. So from a financial strength standpoint, when it comes to claims, that is the big kind of shining note. The money is there, the backing is there from these large companies to make sure these assets are protected. We're also the only company that's endorsed by VRBO on the Proper side in terms of a complete replacement package policy for your home or your condo. So you don't need to carry other insurance when you carry our product.
And you guys have a couple packages that I think are kind of cool, Nick. And are you guys still doing the arbitrage package where if somebody's going to do arbitrage, it'll cover their stay and that stuff like that?
Yeah. So in 2020, we came out with Wavo. In 2021, Wister was more or less reformed. That's a rebranding of the old innkeeper business that was sold off years ago, specific around property manager business insurance. Proper is the property owner or arbitragee, if you will, or arbitrageur insurance on an annual basis. And then Wavo is the damage waivers per booking. So real quick on Wister, because I don't feel a ton of folks fall into this, but if you did, just to kind of know who they are, when you are a property manager or a co-host of multiple properties, a lot of the responsibility falls on you for insurance. And so you need to have general liability. You're going to have computers and machines and equipment and accounts receivable and all these other things that you need to navigate. and all of those need insurance around it. So there's a lot of different things that can go into building a package for this, and Worcester is a solution there for you to take a look at if you fall into that category.
The more properties you have, is it higher premiums based off that, or how do you guys actually come up with premiums on that?
Yeah, so actually, it's a great question because we have a new program with Worcester coming out in January. And so it's a custom program that was put together by our ownership team that's completely different from a rating factor. So right now, the retail market from a management insurance standpoint, it's all based on gross sales. It's not based on total exposure. So Jesse, let's say you and I both own a property management or a co-hosting company, and you co-host or manage 10 properties and I manage 100, but your revenue is 3x what I make because I'm doing little tiny one bedroom properties and I don't make a whole lot of money. So my game is volume, your game's luxury. You're going to pay 3x in premium than what I pay, but I have way more exposure because I have way more properties, right?
Yep.
So what we're doing on the rating here is we're basing it off property count. So it's a property count rating. So as your business grows, the premium does grow with you, yes, but not nearly as fast or as aggressive as a revenue-based liability rating would. The other side with this, and with complete control over the rating that Worcester has on this, when you put an additional focus on the type of insurance your property owners that you're helping manage have in place, you can get discounts on that general liability rating by making sure that you're tracking their insurance and they have the right insurance in place. By getting a little bit more involved and knowledgeable on your book of business and what your homeowners are doing and leveraging these partnerships, you can end up saving a bunch of money on the back end via your insurance premiums. So I'm really excited to roll this out to everybody in 25. So the goal here is to leverage the other insurance products in what we do, but also through education, because how does the traditional property management market address liability at properties under management? And it's not great. That policy language is very flimsy. So it's really important to make sure that your property owners are naming you as an additional insured on their home product, as well as carrying a commercial general liability product to ensure complete protection. And that's where your self-audit internally. So like Jesse, if you got 50 people you co-host for, it's a little bit of legwork up front with Worcester, but going through and seeing what they have. And if half of those properties have the right insurance, then you're going to get a significant discount on your GL rate. Worcester.insure is the website, and you can look up Worcester Insurance on Google. It'll pop right up, and we get our official slip. That's like the contract on January 1st. And then everything is in programming right now. So it won't be long after the beginning of 25 that the new product will be rolled out nationwide. On the property owner side, which is the most important end of this is where primarily the coverage at a property is going to come from. That's where hosts and arbitrageurs need to spend a little bit more time on understanding and utilizing their product and understanding what they have and what it entails, looking a little bit more from the coverage side. Insurance premiums are all based on transfer of risk. And so the equation is simple. The more risk you transfer onto the insurance company, the more you're going to pay in premium. The more exclusions that insurance company has, the less you're going to pay in premium because you're self-insuring. You're going to pay more money out of pocket in the event of a loss. So that's a really important thing to go through. Retail markets are never going to adequately cover short-term rentals. They do have products out there and they do have policy forms that are curated to short-term rentals, but they're super, super cheap. They're a couple $100s a year, and they're that for a reason. They don't really cover that much. They don't really change the coverage. They don't really add a whole lot in. Basically, what they're telling you is you're paying this $250 a year to add this piece of paper to your policy, where if a tree falls on your house or a water pipe breaks, they're not going to deny that claim due to the business activity of short-term or mid-term renting. But it's not giving you additional scope of coverage. And so that's something that's really important to understand. You see something like long-term rental, or seasonal rental on your policy, it's probably wrong. If you see short-term rental under occupancy, chances are you have one of these endorsements or riders tied to the policy. but it's still pretty weak in terms of additional coverages and protections that are awarded to you. So basically in the evolution of real estate investing, right, short-term rentals have been around forever. This isn't a new concept. The new concept is the very public and online advertisement. And that's where retail insurers become very hesitant around what they're going to cover. Put it this way, one, if you've ever been to a short-term rental show, any conference, you'll never see a State Farm and Allstate and Nationwide representative at those. There's 190 million residences in the US, and most families have 1.5 vehicles. Their money is made in the standard personal markets. Our pool, specifically to what we do in short-term and mid-term rentals, is around 2.5 million properties. So it's very small. So it's not worth it to them to go and spend all this money in development and try to capture some of this market. It's not going to be a money leader for them. It's not going to help their bottom line. It doesn't make any sense. Higher level it real quick for everybody. How do I know just by looking at my deck page? You're looking for HO, it'll say HO, it'll say DP, or it'll say CP or CPP. Those are the 3 different types of insurance policies that are out there. HO stands for homeowners, and it's meant for a primary residence. It is not meant for a second home or something that is generating money. A DP product or a DP form is meant for long-term rentals. So it covers rental. And then these companies like Foremost and American Modern and a few others will enhance that further by adjusting the policy language to include short-term rentals. But it does not change what is in the base DP landlord forms in terms of coverage. And 2 key components on a DP form that will never change regardless of your enhancement is malicious damage caused by a guest is never covered. And I've never seen a company come out on the DP form with that protection. And premises only liability. And premises only liability means a claim that happens off your property line. Easy example, let's say lakefront. Your lakefront property with a dock, that water is not your property. That's off your property line. Injury or death is not covered under premises liability. CPP, a commercial package policy, is going to have commercial property coverage, which is much broader form, and commercial general liability, which extends liability protection off your property line. That's the foundation of proper insurance's coverage, is CPP. Really, we're all 3 of those put together, hence our logo, the Fabicon, the 3 diamonds. It's all 3 of those types of policies put together, right? But if you open up your deck page right now and you see HO or you see DP, probably a good opportunity to investigate some other insurance options that can be more comprehensive for you.
And what would that be under coverage?
It's usually right on top of the form, right?
Like
when you open up your
on the declaration, it would say that right on top.
Yep, and it'll say DP3 and then like parentheses fire. What do those numbers mean? That's another thing to look. So you have HO 1, 2, and 3, and then you have DP 1, 2, and 3, and then on the commercial forms it's 1010, 1020, and 1030, and that's the difference between basic form, broad form, or special form all risk coverage. You want to see the 3 primary residence, you want to see HO3, but a DP3 is special form all risk, and a commercial package policy with form 1030, that's the special form all risk. That's the highest level that you can get on a property coverage form. So that means the fewest exclusions that company is able to offer you. If you see DP1, you have really almost no coverage for the most part.
Got it. Yeah, I had that before. I was talking about earlier when I almost, I had DP1. I remember that specifically was on the top.
Yeah, you're covered for like fire and wind. That's pretty much it. 8 named perils. And if it's not one of those named perils, then it's not covered. Broad form coverage, or the 2, is 16 named perils. And then special form all risk is just a list of exclusions. If it's not listed as an exclusion, then you have coverage for it.
This is where insurance, like, I don't even know what you just said right now, Nick. I have no clue what that even means.
Yeah.
But what's cool, like when I talk to your team and I talk to, like, they'll break it down. Here's what this means. Here's what this means. Here's what this means. Because I think a lot of us get lost in like, what's the coverage? Those things right there. I think just insurance in general is always confusing to me. And a lot of the other folks in this space probably feel the same way, but
I mean, that's truly what it is. And, I watch my kids try to put a puzzle together, and even with the picture in front of them, they struggle. And it's like, well, if you don't really know, you don't know where to start to make decisions that are going to work for you. Learning and understanding how insurance can be leveraged and and learning more about how to manage risk, that helps you make these decisions on what's going to work best in your business. And for some folks on that call, it's going to be working with Proper. Based on what type of amenities your property offers, that's going to take a higher level of understanding what the liability coverage is. And so we talk to people with like hot tubs all the time, and they're like, well, I'm not worried about off-premises liability because I'm not lakefront. I don't offer bicycles and things like that. So I'm fine with my premises policy plus the air cover, let's say. But for a hot tub, communicable disease is excluded. And what that means is like a hot tub rash or hot tub folliculitis, Legionnaires that can come from that. It's just they don't have coverage for it. They exclude it. That's why they're typically cheaper. So thinking about things like that, are you pet friendly? Do you have animal and pet liability? 1 out of 5 liability claims filed in the US is a dog bite. So those are things to kind of think about. WABO, to touch on that. So WABO is available to 2 types of clients. So you have the on-demand client, which is 1 to 3 properties. And then you have an enterprise client, which is 4 or more. But there is a little bit different pricing breakdown in terms of how much it costs. And this price is transferred to the guest at time of booking. For on-demand clients, the waiver limits, I believe, are 500 to 5,000. I know the cap is 5,000. I don't know what the base number is. And then for enterprise clients, it's 1,500 to 20,000, depending on what you want to put in that booking. And then most folks are upcharging the guest a few bucks, and then you're generating additional revenue by having this in place. But the beauty of this is no more guest communication. You remove the need for security deposits and potential chargebacks, and you eliminate the guest communication entirely with expedited payment on losses. So what that means to WABO is cash in your account in 72 hours.
Yeah.
Okay?
I think when you said WABO in, like, Julie, what is it, a couple of weeks ago, or I don't know if any of the team's in here, but you get WABO partnered with Furnish Finder too for direct bookings only through that platform, correct?
Yeah, and there's a couple other platforms. There's a new technology provider that rolled out called Happy Guest, and that's really meant for, a user like me who might have 1 or 2 properties, and I need some type of technology implemented to help me with guest communications and things like that. And WABO, it's called WABO Now, is the on-demand. It's available through that platform as well. And these partners are growing with that. And then enterprise clients, it just bolted into your web offering, your direct website and things like that. And then guests pay a $50 non-refundable fee. You pay WABO $20, you keep 30. That's kind of the math equation there. They're covering the small things. So like with Proper, you opt for, I say, a $2,500 deductible. Well, damage caused by a guest, we're not going to respond to less than $2,500. So if they break a chair, bust up a TV or something like that, and it's $800, $900, $1,000, that's where you engage with WABO to pick up those smaller things. It's just really meant to try and ease your life for those smaller things that tend to happen as we're operating our properties. So to talk a little bit more kind of about risk. So for starters, again, property owners need to have the right insurance, and you need to take some time to get into the weeds on it and understand it. The biggest risk is always at the physical property itself. And it's always the property owner's responsibility to ensure that. It's not the manager, it's not the co-host, it's not the guest. It's you, the owner of the asset, or for arbitrage, the operator of that business at that location to ensure it. If you are utilizing a property manager, you have to list them as additional insured. I have never seen a property manager contract without that in it. If you're getting into management or you're getting into co-hosting, which co-hosting has some blurred lines to it, you need to put an additional insured requirement in your contract with these owners. You have to be listed as additional insured, and you should require no less than 1 million in liability coverage. It's simple, it's basic, it's attainable through multiple different insurance marketplaces. And so it's really, really something you need to think about and need to be doing if you're not doing it right now.
Yeah, Nick, real quick on that, because I had to do this. So essentially, they put you on as an additional insured on their policy, correct? That's what it is.
Yeah.
So everybody that's co-hosting right there, that is super important for you to do. Can you explain why that is again, Nick?
Yeah. So if somebody's injured at your property, they slip and fall in the bathtub. The injury attorney is going to name 2 people primarily in this lawsuit. The person who engaged with that client for the booking, which would be you, the co-host or the property manager, and they're going to name the owner of the asset because they're the ones that hold the contract with the co-host or the property manager. Now, by naming them as additional insured, it means that they are covered with respects to the operation of the business on the property owner's policy. So if you have proper, we name Jesse as additional insured, and Jesse and Emily, I'm going to use you because your picture's up here. Emily's the homeowner, Jesse's the property manager. Emily's getting sued. Jesse's named in that lawsuit. Proper insurance is responding up to $1 million. Jesse is not engaging with his business insurance. And that's super important for Jesse as a property manager, because as soon as he files a liability claim on the policy he has right now, that's not our product, you could probably expect 2x rate increase from filing one claim. So it's in Jesse's best interest to keep his commission percentage low to cover his expenses, to make sure Emily is naming him as additional insured. And it's going to be a contractual requirement between Emily and Jesse that Emily names Jesse's business as additional insured in that contract. The other thing to that is a lot of traditional property manager policies. And again, if this is what you're getting into with co-hosting or management, right now, those retail products have exclusions in them that says the general liability does not extend to properties under management. So again, that's why it's super important that you name the property manager as additional insured on these policies, or the co-host. Exactly.
Yeah.
Exactly. Yeah. So
and Mark's got a good question here. What's the minimum liability for additional insured? Do you know what that is, Nick?
It should be $1 million. You can do whatever you want, but it should be $1 million before an umbrella.
Got you. Okay. And do you guys do umbrellas there or no?
We don't, because umbrellas are super expensive and they tend to have their own subset of exclusions. So we do offer an increase on the base liability from 1 million per occurrence to 2 million. And it's usually about a quarter of the cost of an umbrella. So we can bump that up if somebody desires a little bit more coverage.
Got it. Okay, cool.
Yep. As a host, again, you can be tied into lawsuits for all sorts of things. And I've seen all sorts of craziness in my near decade with proper animal and pet liability. Whether you are pet friendly or not, you could still be held liable. You could be held liable because your guests go for a walk and they get bit by the neighbor's dog, which is, yes, a claim we have had to engage in. And it's not that you're liable necessarily. It's just that you were named in that lawsuit because they stayed at your property. And then who pays the legal defense cost here? Well, if you don't have coverage for that, or if it's excluded in your policy, then you pay for that out of your own pocket. And it could cost you easily $10,000 just to get removed from that lawsuit to show that you're not negligent or liable. So by having the right coverage here, you don't have to worry about it anymore, because that legal defense is provided by your carrier on the policy at a $0 deductible. Liquor. Some people offer bottles of wine. Some people leave booze behind at the vacation rental because they can't fly home with it. So if you're gifting a bottle of wine, make sure you don't have limitations on liquor liability. If you're a cleaner or you yourself are doing the cleaning and you miss a cabinet on inspection day and there's a bottle of booze and the next guest drinks it and gets hurt, you could be held liable.
I got one for you, Nick.
Yeah.
This is one I heard the other day. Someone with severe peanut allergy came to a property and there was peanuts. The cleaner didn't clean them. They were stuffed into the seat, into the cushion couches. The child that stayed at that property had like a huge anaphylactic issue going on. What about something like that? Like, crazy 1% of something, a cleaner missed a thing. What does that look like?
You, the host, could be held liable or named in a lawsuit for that, especially if there's, medical bills, ambulance ride, or worst case scenario, death. You could be named in that lawsuit. And then it comes down to, is there a foodborne illness limitation or exclusion in that policy? Although rare, it's a rare piece of form language to see. They're out there. So it's highly unlikely in the standard markets, including like through us proper and most of our competitors, they don't have that in it. So you're probably going to be all right with whoever you insure with. But again, that the cleaning of the property and providing a safe space, that responsibility always falls on the host of the property and the co-host and the manager. Drugs missed on post-day inspections. There was a death due to a fentanyl overdose on a 16-month-old child in Miami a couple of years back. That fell on the property owner and the property manager. So
I've had Airbnbs where our cleaners, like, I'll go do an inspections myself, or I have one of our team members will go out, and same thing happened, man. Somebody put a shoebox with like cocaine in the garage. It was a short-term rental property. Literally right there where like a kid can get it. And the guest sent a note and was like, I think there's like drugs in here. There's like little bags and stuff. And it was a really bad scenario. Cleaner didn't the garage, and if they did, they literally weren't looking. I was right in the front. The laundry was right there, so they just like booked it to laundry, wasn't actually paying attention there. And that's why we have checklists and we have to have them take pictures before and after, and like literally everything in there. Our team member has to like approve it before they'll, allow them to even leave. So I think that, again, it's like those are really important things that you guys have short-term rentals, even midterm rentals. I think it's really important to make sure, although I do have these issues that happen way more with short-term rentals than midterm rentals, because most people are just like working. And
Yeah, and with the increase of competition with short-term rentals, just amenities in general is on the rise. Like everyone's trying to add the next cool and fun amenity to try and drive more bookings to their property. And we see a lot of exclusions, like a recreational activity exclusion is becoming commonplace. And it's a very broad piece of form language. And so whether you're offering bicycles, canoes, workout equipment, things like that at your property, you want to make sure that the liability is extending. And then in terms of like managing these risks, it's all about like when you work with proper, we're going to give you all of the kind of baseline steps of here's things to do to try and prevent something from happening. But if something does happen, we're giving you these steps to put into place because it gives us more arching defensibility to protect you and get you out of that lawsuit. If you have a piece of gym equipment in your garage and your insurance carrier isn't telling you about waivers of liability and cleaning and signage and instructions on use, there's a pretty strong chance that if something happens using that amenity, you might not have coverage. The old adage in insurance is that they don't underwrite for it, they probably don't cover it.
Got it. So you have to
Right.
you say, hey, I got a Peloton, the additional room. There's a couple weights in there. Like you'll have to say that. Then you'll have to put a little sign that says use this at your own risk, or whatever. This is how you use this, or something like that. Am I right on that?
Exactly. Yeah. Yeah, absolutely. Bunk beds is one people think fairly harmless. There's a reason bunk bed manufacturers are federally required to have a stamp that says like kids below the age of 6 can't be on the top bunk.
What about the mattresses? Like, how like back in the day, if you ripped the thing off the mattress, you can go to jail. You guys remember that? I don't know if you guys are old enough, but that was like when I was younger. But my parents would be like, "Don't rip that off the mattress. We're going to go to jail." And I'm like,
Yeah, the mattress cops are going to come after you.
yeah.
Yeah. And these are just things that the retail insurance market, when you guys hear me say retail insurance market, it's like if they advertise like during a football game, they're not doing short-term rentals. So they just don't have coverage for this stuff. So you leave yourself very, very exposed. The next question you need to ask yourself when you're going through this is, does coverage exist? And so kind of into what I said, if they don't underwrite for it, they probably don't cover it. Do you have a business activity exclusion? The recreational activity exclusion? Is your off-premises liability protected? Do you have exclusions or limits on guest caused damage, animal and pet liability? How is my income protected? And again, unfortunately, with the retail carriers, the answer to all of these questions is typically no. They don't have any of this stuff available to you, meaning these exclusions are in their policy and you're not covered. So why don't these retail markets play in the short-term rental game? And the big thing about it is concentration of risk. This map is a little bit dated, but still gives you an idea. All of those blue dots, those aren't individual properties. Those are concentration of risk. So that means we insure 5 or more homes in that dot. You see Florida and all the way up the eastern seaboard, it's just a sea of blue, all the way up and down California, Seattle, Oregon, a lot of these kind of ski areas and things like that, Denver area stuff. Like this is all concentration of risk. And when an insurance provider has concentration of risk, then they have higher probability of what's called a shock loss, which I'll get into in a sec. They like having their risk spread out. They don't like having concentration of risk with a certain specific risk profile that's identical. Wildfires, for example. Wildfires are a new normal. The insurance market as a whole sees about $20 billion in losses annually from wildfires. Wildfires are expanding into the East Coast at a rate never seen before. When Gatlinburg, Tennessee caught on fire in 2016, they called it a 500-year event. That area has now caught on fire 6 times with major fire events since then. Fire risk is now an issue year-round in the United States. It's not just a summer thing in California anymore. It's everywhere. Hurricanes are becoming more prevalent. We are seeing to the note of $65+ billion in losses, and potentially way greater than that just from Helene and Milton alone. Again, these risk profiles are changing. North Carolina in the Appalachia never expected to be hit by a hurricane of this type of force, and it happened. And, it's devastation. So how are we protected against these natural disasters? A lot of people get into this old adage that insurance covers acts of God. The problem is that while they do, a lot of companies now have limitations around how they respond to claims involving wind forces, involving fire, involving smoke, involving flooding, all of these different types of things. So as our country and as the climate has changed and evolved over the last decade, so has insurance. So if you haven't looked at your insurance policy in the last 10 years, it's definitely time to. So let's talk about some shock losses. I had mentioned that just a moment ago. So what is a shock loss? It's something outside traditional and normal. And virtually every claim that we experience at a short-term rental is outside of normal. They're usually pretty wild things that happen when it's not like a fire or something like that. So we've had $1 million settlement at least 10 times over for drownings in swimming pools. We had $1 million settlement a couple of years back for carbon monoxide poisoning in the Tahoe area. New Year's Eve 2019, $680,000 for a total loss fire in Texas. Guests thought they had extinguished the fire, went out for dinner on New Year's Eve, and when the guests came back from their dinner, the house was gone. So these things unfortunately happen. And if you don't have the right insurance, these are expenses that fall on you. Let's talk a little bit about accidental versus malicious mischief or damage at a property. Accidental damage by guests happen. My kid knocks the TV over. All out of nowhere, I was doing the dishes and the dishwasher imploded and now there's water damage everywhere. Like that's not an at fault type thing. But as you can see in these pictures, this is malicious damage. These people came into this place with the intention to throw a party, and they completely destroyed this cabin in Washington. You can see the settlement down there. $103,000 is what we ended up paying for this 3-bedroom cabin in Washington State, and that included their lost business revenue for all the repairs that had to be made. This claim would not be covered by a lot of my competitors because they do not cover malicious damage by a guest.
What about lost revenue? Is that pretty standard in the, what you guys have?
Yeah, so we do revenue different. The beauty of insurance is it falls into categories of 3. So once you start understanding where it falls in like the column of 3, it's pretty easy to. So you have what's called loss of use, and loss of use is like I have it. My home here that I'm presenting from, I have $59,000 in loss of use coverage. So if my house caught on fire, my family can't live in this home anymore. We have that benefit from the insurance company to go rent out another home while my primary residence is being fixed.
Yeah,
that does not pay
loss of use here, like additional living expense.
Yeah, exactly. That's another way, additional living expense. Then you have what's called loss of rents. Loss of rents is fair market value. So it's based on the long-term rental fair market for your size of home. And then you have what's called loss of income. And loss of income pays your actual revenue that the property generates, but they do have deductions. So what Proper did was we actually came out and said, we're not doing any of that. We're going to pay lost gross revenue with no time limit. So you tell us. So it's not a net, it's not a profit. It is the actual gross revenue dollar for dollar that property makes before expenses. That is what we pay.
Average?
So it's not an average. It's based on your actual book of business. So Jesse, you and I have homes right next to each other. They're identical tract homes in a development. They're both short-term rentals. You rent your house out 365 days a year and you make $100,000 a year on that place. I don't, and I make $30,000 a year. Nobody's getting the average. You're going to get up to that $100,000 on a claim because that's what you actually make. I'm going to get up to $30,000 because that's what I actually make. There is no adjustment based on that.
But that's booked right now, Nick. So like say I had my calendar is booked out for the next, we're just going to say it's January now and I'm booked out. It would be that specific amount for what's already booked that I'm going to be losing because of the repairs and all that stuff.
That's the easy math for my claims adjusters. Yes, because you have that on the books and they know dollar for dollar, penny for penny what that is. Now, if that claim takes longer because you had to shut down your listing, so you're not getting those future bookings anymore. If you have historical, we look at your historical numbers. If you don't have a history of bookings because you're new to this, we're going to AirDNA, we're going to VRBO, we're going to Key Data. We're hitting these companies and seeing what the RevPAR is supposed to be. And then we're paying you that subject to the limit of insurance.
Got it. So you guys are then going to the additional, and that's where it gets tricky for us because we're in the mid space where, I mean, we could have a claim that's $10,000 and then you can, so it's like, it's so flexible. But if we've had if we were to go back and say, this is our claims over the last 6 years, or this is what we got, this is the type of bookings that we got, you guys would be able to base that specifically off those leases that we've had prior.
Yep, off the historical. So if you had a claim in July and you've never rented your property out in July ever, there's no income to pay you. You're not losing anything, right? Because historically you've never rented it. You use that for family month. It sucks, but you're not getting any revenue. But, if you're like, we typically make, maybe right now is your off season and you have the claim and you're like, we do 3,500 a month average in our off season. And then when you get into more of a peak season, and you're like, that's when we do $7,000 a month, then those distributions will adjust based on that through the claims process. Liability claim. So we get a lot of kickback on telling people to put handrails in at their property, but this claim that happened in 2017 is why. So this was also an arbitrage where this happened at, and you can see the tile stairs, and the photos on the left, you see that there's no handrails. This home was built in 1988, and so building code at that time didn't require a handrail on the interior stairs.
Yeah.
Elderly lady slipped and fell down the stairs, broke her ankle, sued for $1 million. We ended up settling on that loss for $375,000. The big one there is the second line item down, attorney. That attorney cost is $22,000 in this case. How does this relate? You might go, well, Nick, you were talking about on premises versus off premises. This is on premises. Where would they not pay for this? Building code limitations or exclusions, or ADA compliance limitations or exclusions in that policy. Building code as of 2015 requires that any stairs, interior, exterior, with 4 or more risers requires a graspable handrail. And so that is what the attorney is going to go after. And so this $60 handrail could have saved $400 and some odd $1,000 in this situation. So it's really important to kind of know the building codes and what those mean for your property and where these areas may need to be addressed. That's another benefit of us proper. We know all of this. We're going to look at that and we're going to advise you accordingly.
Got it. Chairs.
These silly little plastic chairs. This was $51,000 in loss for medical. Only and another $8,000, almost $8,400 for the attorney on this one. Making sure you have well built, chairs and tables and furniture is important. You look at this and you're like, this silly, stupid little school chair. It's probably it's at the property. They've been a vacation rental forever, and somebody who might be a little bit bigger in size sits on this chair thinking it's safe. It breaks. They go to the hospital. Now they're suing you. So managing these risks, verify your insurance is key. Hosts or managers, co-hosts, check with Worcester for a start. Proper insurance for the property owners. Always verify you're carrying the correct coverage for that specific property. It's not a one size fits all. Every property is going to be different and needs a different level of care from an insurance standpoint. Always a minimum $1 million liability. Never settle for anything less than $1 million. You can see from those claims examples just how pricey these things can get. You want to have that top layer of protection on the liability. Address the amenities that you are either offering yourself, or if you're managing a property, address those amenities with the property owner on, you need to make sure you have coverage for these things or else we're not going to offer it. So are you allowing pets? Make sure there's no limitation on dog bites, because I should have updated this. Last year was $1.1 billion in claims for dog bites in 2023. And always have a great referral. If you're managing properties, like, make sure you have a couple of good solid referrals. Do your research as a manager on who's out there. You know me now, Proper's there. So there's at least one.
Yep. Got you.
You can't prevent natural disasters, but making sure that the owner's insurance package or your insurance package is top tier and includes that lost business revenue protection is key. Natural disasters will come out of nowhere when we least expect it, and you want to make sure you have the right protection and team behind you. Learn the basic building codes. Like I said, these are no longer residential homes. They're commercial properties available to the general public. You will be tried as such. So make sure you're up with the current building codes. There is no such thing as grandfathering in this industry. You are not grandfathered into not having a carbon monoxide or smoke detectors in your property because it was built however many years ago. Go down to the hardware store and buy the $30 kit of 3 and get them put in your property. I know for a lot of folks, this could be overwhelming, and you might be thinking, how do I navigate this? Where do I start? I don't even know where to begin. We partner with companies like Breezeway. I'm sorry, I should have edited this slide. This is from another stacked presentation where we're back to back, but Breezeway has a great program. It's super inexpensive and it's safety related. and it's going to give you the checklist that you need on your property to check the boxes and make sure you're doing these self-management checks for risk. The other upside to that is we love people doing safety checks so much. If you complete the Breezeway safety certificate, we'll give you up to 10% off your insurance premium. And then always remove unnecessary risks from the equation. Diving boards, slides, trampolines, motorized watercraft, those things just should not be offered at your property. I like to tell everybody, if it's not an amenity that's searchable on Airbnb, VRBO, or other OTAs, it should not be at your property. So when somebody is searching for your property because they want a pool and you have a pool, they're looking for a pool. They're not looking for a diving board or a zip line into the swimming pool. They're just looking for a pool. So remove the other stuff around it to help eliminate unnecessary risk. So that's kind of it in a nutshell. You guys can find out more from me directly at our website, proper.insure. If these other products that we offer, just a quick Google of their name and you'll be able to find them. Or if you reach out to us, we can get you introduced if that's what you're looking for.